Okay. Good evening. Welcome to today's class. Uh, so before we start the class, I want to quickly say apologies for the last class that we could not complete this topic. So because of our network. So today we'll try as much as possible to complete it on time so that we can move to the next topic in the next class. So my host, let me confirm. My host, can you hear me, please? My
Hello,
host.
Prof. We can hear you. Hello? Hello, Prof. Hello,
My
Prof. We
host,
can
can you
hear
hear
you.
me?
Yes, we can hear you. Prof, I can hear you clearly.
Hello, my host.
Yes, I can hear you.
So can you please, if you can hear me, can you please drop a chat for me? Hello, my host. Can you hear me? Oh, oh, that's lovely. Thank you. Yeah, thank you. Okay, so we can continue the class then. So, last class we started a new topic, and we said is actually preparation of account for non-profit making organization, where we are able to differentiate that we have the two type of organization. We have those that into the set up for profit making, and the ones that are set up for non-profit making. And we're able to look at the one that talking about non-profit making, the type of account they prepare. That they prepare what we call the receipt and payment account. They prepare the income and expenditure account, and also they prepare statement of financial position. And we say that whenever they are using cash basis, that's when they use what the receipt and payment account, in which we are able to show the format. Then we also talk about the other account, which is what income and expenditure account. And income and expenditure accounts are what we are prepared whenever they use accrual basis. And we also said that there's some similarities between profit income statement and income and expenditure account. Now we said that well, there are also some differences. The similarity is that both of them use what accrual basis, but the difference is and in their terminology. The difference is in sense that the income statement use what we call the profit or loss, while the income and expenditure statement use what we call the surplus or deficit. So there are differences. So they do because they are not set up for profit making. So it's very wrong for us to say the excess of their income of expenditure should be what profit. No, it's not profit. What is surplus, and that surplus will be taken down to the statement of financial position under the equity fund capital, where it will be added under the accumulated fund. That's what, or it will be used to reduce the accumulated fund if it's a deficit. They will look at that. We also look at where they get their money from, the subscriptions. We say subscriptions are membership bringing money to the what to the club, which they have a similar or the same interest. So we are we able to look into that. Then we now say, okay, fine. If we are able to look into that, then the next thing for us is now to prepare our financial statement. So we are about to start a question one, before we have a break in transmission. So today we shall complete question one, and we shall also look into question two. So let's start question one. This question one is talking about what the following is a summary of receipt and payment for the year to March 31st, 2016. So that they gave us the receipt amount, they give us the payment amount. They give us other relevant information at the beginning and end of the year is as follows. And because we are preparing the account that you are required. So they gave us April 1st, 2015, They give us March 31st, 2016. So March 31st, 2016 is the end period. April 1st, 2015 is the beginning of the period. So it means that our accounting statement that we are going to prepare will be between the what April 1st, 2015 down to March 31st, 2016. If we count the month in between there, it will give you a total of 12 months. It will give you a total of 12 months. So the first one says that you are required to prepare club bar trading account for the year ended 31st, 2016. At the same time, also, you said that what the income and expenditure account for the year ended 31st, March 31st, 2016, and also the statement of financial position as at March 31st, 2016. So these are what we are expected to prepare. Now, if that's the case, then we are good to go. But I remember I said that whenever we are required to prepare a trading account, club bar trading account, what you are asked to prepare is the same with what the same knowledge, what you know before in your secondary school. That is trade account. So we are required to prepare trade account. So now trade account is where the account that have the sales, and at the same time they have what we call the it have the sales firstly, then it have the gross profit. So it sales minus the gross profit that will give us our sales minus cost of sales that will give us our gross profit. So that's what we are required to calculate in this our trading account. And I remember I explained that the reason why we normally pick the net figure that we are going to show as our income under our income and expenditure account. It is the net figure that will be displayed under our income and expenditure account. So let's prepare the table for that. So we come back here. We have been using T format over time, but this time we're going to make use of vertical format. So we have been using T format in the sense that if we draw T, we have the right hand side and the left hand side. But this time around, we'll be using the vertical format. So let's start preparing bar trading account for the year ended. Which year ended are we preparing? So let me open my question. For the year ended. Okay, so let's complete this. For the year ended 31st March 2016. So that's what we are working on. So now, okay, let's see. So the first one is okay, sales. Remember, we said what the purpose is for us to get the profit, the gross profit, in quote, gross profit. So we have the sales. What is the sales given to us in the question? If you look at the question, the sales given to us is 405. Okay, let me just show you this because we are just starting. So let me show you this what I'm talking about. If you look here, can you see this? Bad takings. Bad takings. That's the sales. You can see under the receipt, bad takings. Bad takings is what is the sales for the bar activities. So that's why we have 4 or 5 year bad takings. So after that's what we use our sales. The next one is for us to identify our cost of sales by identifying firstly our opening stock, secondly on purchases for the period, thirdly closing stock. So if you look at here, we have bar purchase here. We have bar purchase here to be what 277,500. 277,500. That's your bar purchases. But you now ask yourself, do we have opening stock? So you go back to the question and ask the question. Were we giving closing stock? So you ask the question. So if we are giving closing stock, you come here and put, okay, this is bar inventory. Can you see? This is bar inventory. It means that at the beginning of the year, which is April 1st, 2015, we have opening stock of what 30,000. And at the end of the year, our opening stock valued at what 37,500. So if we have this to be 37,500, it means it's our closing stock. So we have our purchases here, we have our purchases, we have our bar inventory. Then we can get the total cost of the cost of sales. You can get the cost of sales. So let's come back here. So we have that to be that. So we have other ones now what we need to less our cost of sales. Cost of sales. So let's less our cost of sales. So what are the components of cost of sales? The first one is what is the opening inventory. Opening inventory. The second one that we have is what? Purchases. We add up the purchases. What we add up to actually give us cost of goods available for sales. Then after that, we less our what? We less our closing inventory. We less our closing inventory. Then when we less our closing inventory, that will give us our gross profit. That will give us our gross profit. So let's now put in the figure. So let's put the figure. So our opening inventory that we have is 30,000. After we have that, our purchases, the bar purchases, is now a total of what? 277,000. 277,500. Now we need to add this together. So we get our calculator. In the exam, please, if you know you're not too good in adding things using your just looking at the figures and adding it, please always endeavor to press your calculator. So we do 30,000 plus 277,500. They give us a total of 307,500. That's what? That's our total value. That's our total value that we have. So now that we have that, so we now have this closing inventory. So we need to reduce our closing inventory because I didn't put less there. I won't put bracket. Assuming I've put less before my closing inventory, I won't put brackets. So since so far I didn't put less there, I'll now put open bracket. And open bracket in what? In FA means subtraction. Bracket in FA means subtraction. So we do okay. What's our closing inventory? 37,500. That's our closing inventory. So we have that. So if we subtract the two together, it will give us a total value of what? If we press the calculator, 307,000, 307,500 minus 37,500 will give you a total of 270,000. 270,000. That 270,000 is your cost of sales. Is your cost of sales. So after you have getting that, the next thing for us now do what? Is now to reduce it, to use it to reduce our sales. We need to use it to reduce our sales. So our sales is 405. Now 405 minus 405,000 minus 270,000 will give us a total of 135,000. This 135,000, it is the figure of what? Of the gross profit that relate to the bar activities, that relate to bar activities. Now that we are done with that, the second one I said that we should prepare the income and expenditure account for the year ended. What the format that we have used is what is the vertical format. Okay, so let's look at the second question. It says that we should now prepare the income and expenditure account for the year ended. Which year ended? We expect to prepare for the year ended 31st March 2016. 2016, yeah. So that's what we expect. Can you see? Okay. Can you see 2016? That's what we expect to prepare. 31st March 2016. So now that we have that, then as we know, we are using accrual basis. So it's not cash, it's not the items that involve cash alone that we posted there, but the items that what they have actually they are the income that we have earned and the expenditure that we have incurred for that period is what we reflect in our statement or in our income and expenditure account. So let's start with our income. So let's start with our income. So let's start with our income. So let's put income here. Assuming you are using T format, income will be on the left-hand side. Expenditure will be on the what? On the right-hand side. But vertical format, just use vertical command and use that, okay? So we start with your income. Now from your question, if you go back to your question, what are your income? So let's go back to our question. Let's see. Okay, we have receipts. Receipts are what? Are your income. So what we are going to do is we are going to take it one after the other and post them there. Okay, so let's go. The first one that we have is club. So let's put club. So we have club subscription. That's the first one that we have there, right? Subscription. So let's PSIP. Okay, after that, what else do we have? We have donations. We have donations. That's our receipts. What our receipts? What are our donations? We have what? We have the Christmas dance. We have the Christmas dance. Okay, what Christmas dance? That's an event, right? I remember I said that any item that or any event organized by them, they will normally remove the expenditure of the event from it. Is the net event that will now work that will fall under the cost. So under the income side, we have the amount of the event that was generated from the event. We use it to reduce. We now use the expenditure incurred to reduce the amount from generated event. The net figure is now be our income. The net figure will now be our income. So because we are going to do calculation on that Christmas dance, I'm going to what? I'm going to leave it out and move to the next income. Now the next income that we have there is what? Is bar. So now that we have what? We have the bar. Now we are not going to put bar taking there. We're going to put back gross profit. We're going to put back gross profit. Then we now come and put what? Christmas. Christmas dance. Then after that, remember, I said that what? The figure that we're going to put under the Christmas dance is the one that is net figure. So we need to reduce, we need to recognize the expenses that are related to this Christmas dance. And if you look at the payment section, you will see the expenses of Christmas dance, what? Christmas dance expenses. Can you see it there? We have it there, what? The Christmas dance expenses. So you put the expenses here. So let's put the expenses here. Expenses of what? Of the Christmas dance. Now that we have listed it out, we can now what? We can now start putting it in. Now, the first one that we have is what? Is club subscription. Now, club subscription, the amount given to us is 255,000. This 255,000 means the amount that we receive. Was it the amount that we received for this period or for last period? We don't know. So it means that we need to now calculate. We need to calculate the amount that was actually received for that period. That is meant for that period. Is that amount that will be recognized in our what? In our statement of financial position. That will be recognized in our statement of financial position. So let's go to our workings. Let's go to our workings. Let's do some workings there. So we have that. Let's see. So let's go to workings. Subscription account. Subscription account. So we are on our workings. Now, I remember I explained that whenever you are doing subscription accounts, should be what? Two things are involved. You have your payable and you have your receivables. That's arrears and in advance. So, and when you have or arrears due, and when you have the arrears subscription in arrears, it means that what is you don't need you. And it's what it's a receivable, so it's an asset. So it will be fine under what? Under the debit type. So if firstly you have to do what? You have to do the subscription opening balance. You have to do opening balance for both the and also for the subscription in advance. So let's do subscription due. This one due. No, what that means here. Oh, Okay. So subscription due brought forward. After that, so we now look at the question. What is the figure given to us in the question? If we go to the question under the, let me just show you for just once. Let me just show you this. Now, if you go to this question, we are working on this table now. This table to us. That's what we are working on now. It says that all relevant information at the beginning and end of the year is as follows. So that we have the first one that we have there is subscription. Can you see here? We have subscription due. We have 13,500 and 9,500 is the opening balance. While the 9,000 is the closing. We need now is 13,500. But note the 9,000 naira also got later. So another one that we have is subscription reward in advance. This is payable. This is payable. And the opening balance is what? It's 750. While the closing balance is 150. So these are the figures that we have to use in our subscription. And all that was received for that year, the cash receipt of subscription for that year. So once we have this three information, we'll be able to identify the total subscription that is expected to be received, the total income that we can ascertain under what? Under the subscription for the year. We are going to derive that. So let's go back to our workings. So we have our T format. So our working here. And the figures here, as we have seen, is what is so I've done this. The second one, I do subscription in advance. Subscription in advance. It means the people that have paid ahead of the time. So our balance forward in advance. So our balance brought forward. What is my amount there is now what? It's 750. I showed you earlier. 750. After I'm done with that, I can now what? I will leave a space. I'll leave a space in between. Are you with me? I will leave a space in between and I'll come down here and I'll put subscription. Subscription. Advance. That's in advance. Subscription in advance. In advance. The closing balance. Carried down. As what? The closing balance. I'll do the carry down. Now, they are giving me information to be what? To 15. It's actually information to after that, I'll now do sub as well. Let's just shorten sub due, subscription due. They also, subscription due, and that also will carry down. And the figure given to us is what? If you look at the question, is 9,000. Is my 9,000. Once I have that, then I know I'm good to go. So the next time, that's okay, fine. What is the cash receipt? The cash receipt for the year is what? That's I will now if we can find that under our receipt, So we have our cash, because when our cash bank we receive it, we debit our cash bank. So then the account that we credit is what? Is the subscription account that we credit. So the entry for subscription payment is you debit your cash account, then you credit your subscription account. So we have the cash here. So after the what is the cash given to us? That's 255,000. 200 and what? 55,000. Now that we have that cash to be 255,000, then we can now what is the balancing figure. The balancing figure will now be the amount that is expected to be received for the year 2016. For the year 2016. So let's pick our calculator. Let's add the credit side. So addition of all credit side will give us a total of what? So let's do 750 plus 255 plus 9,000. That gives us 264,750. 750. Now that we have that to be 254,750, we now do so that means that this side also must give us 264,750. But if we had 13,000, if we had 13,500 plus 5 together, it will give us 15,000. Now that is for the what? For the debit side. but you now need to minus it. You now do 15,000 minus 264,750. That gives us 249,000. So you come back here and put what? 249,750. Now this figure is the balance figure that will be shown in your income and expenditure account. Okay, so expenditure. I wanted to chat in before, so let's just get info expenditure account. That's what our balance figure, and that is what we're going to find under the income and expenditure account. So it means that we are good to go on this. So we have closed our account. So let's close our accounts. Okay, so let's just close our accounts. Just trying. Okay, so so, and again, if you want to continue, you can even continue now. Okay, this one will now be a subscription for the following year, for year 2016. Will now be subscription due. You brought it down to be what? To be 9,000. Then you go to what? Subscription in advance. We have it to be what? To be 1,500. If you receive any cash, the cash that you receive, it will be what? It will be posted there as well. If you have any cash, so you continue for the year for year 2016. For year 2016. So we have our figure that we need for our income and expenditure account to be 249,000. Let's go back to our income and expenditure account. We have this, so we are back to this place. So we have, okay, what is the figure? We have gotten the figure from additional information. So that's other workings one. So let's call this workings one. Let's put workings one here. Workings one. So the figure that we have derived there is the total amount of what? 249,750. Then after that, we have donations. Donations from our question is what? The donations that we have is 22,500. 22,500. Then we move to what? The bar gross profit. Now this bar gross profit, we look at this with the figure that we're going to pick, this figure here that we find under the bar trading account, which is 35. Please don't miss and take your back takings. Back taking, that will be very wrong of you. So what you are going to expect to do is to not take what 135,000. 35,000 is what we are going to post there. So we have 135,000. So 135,000. Then after that, we have our Christmas dance. What is our Christmas dance? Our Christmas dance is 12,150. After that, what is our expense? Our related expense is 2,500. Expenses. Now that we have that to be 2,500, so sorry, is it 2,250? 2,250. Sorry, 250. Please erase the I think I'm seeing check to. Okay, this is what I'm talking about. This remove the last is 0. So we have 2,250. So that figure is what we have in our. So let's calculate what we give you. This will give you 12,750 minus 2,250, and that will give us 10,500. Is 10,500 that will now be appeared under the second column, which is 10,500. Then we are good to go on our income. We are good to go on our income. So let's add everything together. Let's add the four figures together. Addition of this 49,750 plus 22,500 plus 315 plus 10,500. That was 400 and what? 417,750. Now we have that to be our what? To be our income. The next thing for us now to determine our expenditure. So we now have this to be expenditure. So I determine our expenditure. We start with what? With the figure information given to us. So let's look at the information given to us. We have rates. So we have rates. After rates, what do we have again? We have general expenses. General expenses. Expenses. What does we have? And yes. So sorry, I miss. So so we have that. Then another one we have purchases. We have used bad purchases under what? Under the bad trading. So it's not going to appear under our expense account. Christmas dance expenses. We have used Christmas dance expenses also. So we have used Christmas dance expenses as well. So what we have, the one that we have is the on our table. On our table. So those are the expenses that we have. So now let's try to work with the one that we have on our table. So rates. On the rates aspect, we have information. We have opening stock for we have opening balance for rates owing, and we have the closing balance. But the one they showed us, the 10,500 is the actual payment that we have made for the year. So it means that we need to open an account as due. That's actually due for that year. So we come here and put what? Okay, so we under here we have the rate account. So we have the rate account. So then we now ask what's the owing? Owing is liability. Liability will have what balance? Liability we have what we call the what? The credit balance. So we have what we have balance. So we have the balance for amount of the one that we are owing based on the question given to us is 6,000 what? 6,750. 6,750. So after that, we now have okay, what all is the total amount that we have recognized? You have your cash, your payment, your cash. What is your cash? Your cash account. You know, when your cash is given, you credit your cash, then you post your rent. So now, what is the total amount of money that we have recognized? Is 13,000 what? 500. 13,500. So what is the total amount of money that we are owing now? The total amount of amount that we are owing now is what? Is the if you look at the questions, let's say that the question is 75. So which means our balancing figure, our balance carried down is what? That's our balance carried down because they give a balance carried down is what is 75. Our balance carried down is 75. Now we need to now add it up together. 13,500 plus 7,500 will give us a total of that is 0,001. That's 21,000. So this will give us 21,000. So look at the other side. The other side is 6,750, and it's expected to give us what? 21,000. So it means that the balancing figure is the one that is going to show our income and expenses or other income and expenditure as expenses, because it means the balancing figure is the total rate that was accrued or total rate that was like an expense for that year. For that year. So 21,000 minus 6,750 will give us what? 14,250. That will give us 14,050. So we have to be 14,250. So this figure we what we call the income expenditure. So we are going to write it down to income and expenditure account. So let's go back to our account. So we have our account here. So right here. So let's put our rate. So we have one be rate will be 14,050. That's our rate. So we have that. And that's workings what? That's workings 2. That's workings 2. So let's call it workings 2. So we have workings 2. Workings 2. So we have our general expenses. What have we now done? Our general expenses. If we look at our general expenses, we have that to be what? 393,000. 393,000. Now, any other expenses that we have? So we let's look at our yes. I think we do. The other expenses that we have. Let's look under the. Okay. So let's look at the table. Let's look at the table given to us. So under the table given to us, we have subscription bill, we have used that. We have subscription paid in advance, we have used that. Rent owings, we have used rent owings. Bad inventory, we have used bad inventory. The other one that we have is what is club premises. We have one club premises. Now, if you look at club premises, there's something that is, we have 300,000 at the beginning of the year, isn't it? We have 300,000 at the beginning of the year, and at the end of the year, we have 270,000. What happened? Something that will occur between them. If at the beginning of the year, my my premises is 300,000, at the end of the year, I'm reporting it to be 270, and there's nothing like disposal on what given to us. It means that I've allocated my depreciation, the depreciation for that year. I've been calculated. And then I need to what express the depreciation value that have been discovered. So I come here, put the remember that I said what? That I said depreciation is thematic allocation of what of cost. So we have that depreciation. The first one that we have depreciation for is for the premises. So we have that for the premises. Then other asset that we have is furniture. We have that for the furniture. Furniture. So sorry, that's furniture. I so what is our premises? The premises, the opening figure is 300,000. Why the closing is 270. So 300,000 minus 270. So, we may notice it, there is state depreciation, but because you're an accountant, you need to yes, there's a depreciation there because the value at the beginning is different from the value at the end. So that's 100,000 minus 270 give us 30,000. That's we have 30,000 there. Then we now go to furniture. Furniture at the beginning was what 45,000. While at the end we have it to be what to be 30,000. So 5,000, 45,000, 30,000 give us 15,000. So our depreciation for that period is 15,000. It's 15,000. So this is our total expenditure for the year. So we need to add up to reduce our income. How will that give us? So let's do the addition of the four figures together. So let's press the prayer calculator. So 14,250 plus 393,000 plus 30,000 plus 15,000. That gives us 452,250. Now that we have that, okay, so we can now remove it from what? From our income. That's 4,150. That's 34,500. Now 34,500 will be in here because our expenditure is what? 34,500. Because our expenditure is more than our income. So it will be in brackets. And that bracket is what? It knows that what we have there is a deficit. Can you see that it's not? I didn't put surplus, I didn't put loss, I didn't put profit, I put deficit. So it means that they have actually was spent for that period. They spend more than their income, which we have eaten into their previous income amount. So that's the income and expenditure amount that we expect to. This is what we expected to prepare. That's what we expected to prepare. So that so we are the aspect. So the C aspect says that we should prepare the financial position. We are asked to prepare the statement of what financial position. So let's try to prepare that. So let's work on that statement of financial position down here. So we have as at what? As at 31st March. As at 31st March 2016. So we are using what? We are still using our vertical format. So whenever we are starting, we start with our non-current asset. So we start with our non-current asset. Now that we have our non-current asset here, so what are the non-current assets that we have here? The non-current asset that we have here is what those that have depreciation. So we have, firstly, we have club premises. Then second one is what? We have furniture. We have two. Furnitures are what? So let's do something here. The cost. What is the cost? The cost will come first. Okay, I want to do something. Okay, so let's call this cost. Let's call this cost. Let's call this accumulation. Depreciation. And this one will be our carrying amount. Our carrying amount. So we have that. So what is the cost of the asset that we are talking about, other premises? The cost of the assets, remember that we have this in, please be careful of the way you display your figure. So far you have in thousands, what is the cost? The cost will have what? 750, 750. Then the cost for furniture is 150. Though millions in the question, but because we have put it in thousands, so we have to remove the other 3 zeros. Then we now ask the question again. Do we have what is our accumulated depreciation? The accumulated depreciation, how do you get our accumulated depreciation? So let's look at this question. So to get the depreciation, so 750 minus 270 will give us 480. So what is the cost given to us? 450. What is the carried amount at the end of your 270? Can you see it here? Yeah, this is the cost. This is clock. The cost is 750 million. But this and the carrying amount is what? Is 270,000. Is what is cost accumulation. It was our carrying amount. So far, we now have our carrying amount. We can derive our accumulated depreciation by working backward. So we have here to be what now before 80. For now, be what 270,000. 270,000. So the furniture also we repeat the same thing for the furniture. For the furniture, our carrying amount given to us is what is 30,000. So we have that to 30,000. So 30,000, 150,000 minus 30,000 will give us 120,000. So our accumulated depreciation is 120,000. We have that to be 120,000. So we don't have any other assets. So we can easily we can go ahead and close this. So let's close this. So 750 plus 150 will give us a total of 789. That's 900,000. 100,000. So this one as well is going to give us 480 plus 600,000. That's 600,000. Now that we have that, the next one is now to us to work on this aspect. So 270,000 plus 30,000 give us 300,000. So that's our carrying amount for the period. Now, once that we have that, we can now move to the other section and do our current assets Our current assets. What is our current asset? Okay, so we do our current asset. What are the current assets that we have? We have inventory. So we have our buy inventory, or inventory. Anyone, you can call it inventory, but just know that you just write the correct thing. The other one that we have there is what? We have the subscriptions. Remember, we are working with what? With the tables, that the last table now. So we have subscription. Is it subscription due or subscription in advance? Yeah, which one? The subscription what? subscription due, outstanding amount. Then another one that we have is what? We have cash, we have a cash and bank balance. We have cash and what? And bank balance. What again we have? We have that to be what? Let us look at that. Any other issues? Let's look at the question. Let's look at the question. Okay, no other inventory. So now the absence of other inventory, so we add it. So let's add it up. By inventory is what about the 7,100. Then what you have, what is about subbed in our what subdue? What we have is to be 9,000. The amount that is outside that we are yet to receive, and what's our cash and bank is at 3,000. So if we add these three together, if we have three together, it will give a particular figure, and that figure is what? Our total current assets. So added together, you give 79,500. Now this 79,500 is regarded as what? Our total current asset. That's what we call it, total current asset. So total current asset. So for us to get our total asset, so now we to get our total asset figure, it now be non-current asset plus total asset. Now, if it has now give us a total sum of 300,500. So we have this figure, so we are good to go. We have closed that account. So the next one is now to us to start the other side. Statement of financial position have two sides, the left-hand side and the right-hand side. So we now move to the right-hand side, the other side, which is what? Under the vertical is not other side, but what we move to the equity and the liability section. So let's start with our equity. So we start with equity and what? Liability. So what is the equity we have? Remember, I said we don't have what? We don't have equity. What we're going to have is what? Is equity fund account. Just accumulated what? Accumulated fund. Accumulated fund. Now, once that we have the accumulated fund, we now have to ourselves, what is the accumulated fund given to us? What is the accumulated fund given to us? So if we go through the question, let's start with the division. Okay, that's the balance. Nothing like we don't have anything of such. So we don't have anything of such. It means that we need to what? We need to now work it. We need to calculate it. We need to derive it. So how do you derive it? What we are going to use to derive it is what? It means that the total asset of the previous year minus liability is your what? Your accumulated depreciation for that period. We give you accumulated depreciation for that period. So now let's calculate that so that we can see what I'm talking about. So statement of yes, March 2015. So we our first March. Close. Let's get statement. Okay, so we are here. As at what? As that 31st. Remember, we are for 2016. So we know the figure for 2016. So we need to work backward. So what are we doing here? What we are doing here is that we are going to pick a figure one after the other. We are going to pick the figure one after the other. So we have this. Okay. Okay. So we are going to use that. Okay, now let's continue to class. So we need, number one, we need our total asset. After we have our total asset, we need our current liability. Then the balance, if the amount there, we have the balance, the forward for the accumulated fund in year 2016. Yes, so let's go on with that. So we have our current asset. It's just accounting equation is what is playing out here. Accounting equation says asset equals what? Liability plus equity. But this time around, we don't have our equity. So we just do subject of the formula. So when you do the subject of the formula, equity will now equals what? Assets minus liability. That's what we are doing. We are going to calculate our assets, then we are going to calculate our liability. Then we move our liability from our assets. So we have the current current assets. The current asset given to us, like I said, the current asset given to us what is club. We have that to be called club premises. After club premises, we have furniture. So what is our cost for club premises? Our cost for club premises is 750. And the one for George was 150. The carrying amount, they give us the carrying amount to the 300. If you look at our table, the carrying amount as at 715 is what? Is the 300. So let's choose that to be 300. Okay. Are you with me? I'm trying to okay. So that was 300. 300 is 300, yeah, 300,000. So let's put that to be 300,000. So that's 300,000. Sorry, that's 300,000. So now 300,000 minus 750 will give us what? 750 minus 300,000 will give us 450. So our accumulated depreciation is what? Is 450. 450. So we have that to be 450. Then we'll move on to the next one. The next one is what? From information given to us, we have the carrying amount of the furniture. So we have the 5,000 here. So 45,000. So our carrying amount, we have 50,000 minus 45,000. Now that we have that, so we add up together. So these are our working. So what we are just it's not compulsory to do this way, but you expect to work to I work it to show it. So out of this will give us a 340. Forward, our current asset. Current asset. So what our current asset given about inventory to us. We have that. So we have bar event. After bar inventory, what did we have? Our due. We have our subscription due. After our subscription, we have our bank balance, bank accounts. So what else we have? That should be all. So let's look at what's our event before we look at the question. Let's look at the question. Our inventory 30,000 naira. So we have that to be 30,000 naira. So we are picking the figure under the what? Under April 4 and 15. Under our questions. On our question, we are picking the figures under April 4, 2015. So sorry, excuse me. So we have that. After one, we have subscription. There was our subscription to 13,500. There was our bank balance 24,000. We have our bank balance to be 24,000. So addition of this, we give amount of what? The request calculator. This amount will give us 30,000. 1, 2, 3. 30,500 plus 24,000. That gives us 67,500. 67,500 plus that we give us plus the 300 plus 345 400,000. We have that. They will now calculate our current asset, current liability rather, current liabilities. So we start with our current liabilities. So on our current liabilities, what do we have? We have subscription in advance. We have subscription in advance. We have subscription in advance. So we have in advance. We have sub in advance. What else do we have? We have rate owing. We have rate owing. We have rate. Another thing, I think that should be all. So now, what is our sub in advance is 750. Like I said, this one is 6,750. So we have that 6,750. Now let's add it together. So 750, that's 15, that's 75. That gives us 7,500. So this figure here is what is the total liabilities. So we have what we are lessening it 7,500. Now once we are lessening it, the figure here that we give us, we are going to get the figure. What is the figure that give us there? 412,500 minus 7,500 will give us 405. That's 405,000. This 405,000 is the total amount of money that's the accumulated figure, the equity aspect. So call that what? So we call that accumulated. And that's what we are looking for. That's 405. So we come back to our end. So we call this what? Accumulated fund. That means working spirit. So let's call this working spirit. When we prepare a statement of affairs. So what is the figure that we have there? The figure that we have there is 405. So that we have that to be 405,000. Then the next thing for us to now to what? To now start the deficit. So we have our deficit. So what's our deficit? Our deficit. So we have our deficit from our income and expenditure account. So what is our income and expenditure account? So let's look at the income and account. The deficit from is some of 34,400. So we have that to be 4,400. So let's reduce that at 4,500. We remove that from this, then we give us the value of what? If we press the calculator, we give it 70,500. And that given to us is what we regard to as the total equity. Total equity. So after we had the next process now to calculate our current liabilities. So let's calculate our current liabilities. The item that we have sold in advance. We have rate owings. What else we have? We have nothing. I think that's all. Yeah, that should be all. So what is our sub in advance? Our sub in advance, it will give us a total of 15. Our rate owing is what? Rate owing is 75. Look at it under our 31st March 31st 2016. Rate owing is rate owing 75. Yeah. So add them together, that gives us a total sum of what? That gives us a total sum of 789,000. Total current rate 9,000 plus 375,000 will give us a sum of what? 370,500 plus 9,000. That's 379,400. So that's our balance figure. The figure here, look at the figure that and this one, can you see that they are the same? Which means our equation, counter equation is correct, which means our total asset here is same thing with our total. total equity and liability section. Can you see it here? So with this, so we have this is our total equity and what and liability. So let me equity and and uh, liability. So, and if they are not the same, it means that what if they are not the same, then it's the time for us to now start asking question. It's time for us to now start asking questions. They must be balance the accounts. They must be the same to balance the account. Okay, now that we have that, so that will be the end of that question one. That will be the end of the question one. That's what we are expected to do. We are expected to calculate that. So we are able to do three workings. So please, if you have any question, you can drop your question. Let me give you 3 minutes to drop your question. Chat box. So before we look at question, if you have any question, I'll be responding. I'll just give you a minute or two, so I can type your question if you have any. So please, a minute or two, you can type in your question. So while you're so please type your question. Okay. Question, but the previous lesson, even this when believed arena we have that you want to play on. So we have done three calculations. So we do three workings. Question one, but three workings. We pair the subscription we pair the account and statement of affairs. We said the reason why we pay the statement of affairs is because we want to know the accumulated fund for previous period. So that we need to know the figure. It can be our opening figure for the period that we are preparing for. Okay, I think just a minute, just 3 seconds left. 5 left. Few seconds left. I'm doing this so that I can be interactive. It's not just me. Few seconds left. Okay. Okay. Now no question. Let's look at question two then. Let's look at question two. The information below is and let us mention to it. The one that we solve is past question. Is I can pass question. This question two also is I can pass question. Both of them are I can pass question. Okay. Question two. The information below relates to ABC football in respect of year ended 31st October 2013. 31st October 2013. And they give us a table below. Rent and rate, stadium repairs and maintenance, match takings, state government grants and aid, wages and salary, payment of match bonus, transfer fees of players who leave the club. So we have all again fines and penalties for the year, cash and balance beginning of the period, sales profit of minimum price, money or pay and expenses, donations received, yeah, what they give and the like. So we have it lots, we have a lot about that. So we have the administrative expenses, we have the printing. So we have just the figures listed there. So I'll skip that. So let's look at the additional information. So let's try to look at the additional information. So the first one that we have there is the insurance premium owing. So insurance premium in that 100,000. It means that this money is not unpaid yet. It means the amount of money unpaid they are owing the insurance people of that premium. So we need to account for that. So it means that it has not been catered for under the first table given to us. So we need to account for that. Then after that, the other one that we have is what is the club. The club is currently facing NFF disciplinary committee investigating for players and fans misconduct in respect of week 25 match between ABC and Akure. The club lawyers have stated in their last letter that it was highly probable that the club will be found liable, and based on past experience and the information gathered so far, the club will find up to 2 million among other punishments. Now they are giving us what and this additional information. It means that what they expect to do is that 2 million recognize it as an expenses for the period. It's like a portion. So we have not incurred because, but because we are preparing income and expenditure account. Because we are paying income and expenditure account, you must what you must recognize it. You must make provision for it. You must let it display it, close it under your income and expenditure account. Then the second leg will now be under your current liabilities. The second leg will now be under your current liabilities. So you debit your income and expenditure account, then you credit your current emergency account. Okay. The third one, depreciation has been accurately calculated at 150,000 in respect of the accounting period. So this depreciation also we need to what we need to take it to our income and expenditure account as an expenses that we can use to reduce our income. The other one we have is other match takings not yet remitted by the club agent amounted to 2.6 million. So it means that this amount is that the total match takings stated earlier before the additional information does not include this 2.6. So for us, we need to use 2.6. We now take the match takings from the table plus what? Plus this so let's just do that. Let's do the additional workings. So let's work on that. Then we start posting. Okay, let's work on that. So let's call these workings. That's for this one. So what are we? I mean, so let's first. We ask me. We just okay. This is one where we okay. What we have fine of 2 million. Do we have existing fine? So we look at we search up. We have existing fine. Do we have existing fine? Let's look. Okay, yes, we have fines. Fines penalty of 3,000. But 3,000, if you look at the naira here, is in what is in thousands. All these figures are in thousands. All these figures they are in what these 3,000 that we have here under the penalty is what? Is 3 million. So we pick up, so we have our workings. So find so determination is computation find out what penalty, right? So the balance on the balance. Okay, let's put this in. Okay, for that, I showed you earlier, 3,000. The addition now, we have the addition, that provision. So we have provision, provision is 2,000. So it means that the balance carried down will now be what? 5,000. Addition of the two together is 5,000. I'm going to recognize. Is it 5,000 I'm going to recognize? So we have that. So we look at the data. So if that's what I'm going to do. So let's look at okay, the definition is straightforward. You are going to take it under the common explanation. So that one that we is order machine takings, not here limited by the what? By the okay. So under machine, so to be match takings, have that to be match taking. So we have our balance brought forward. Balance brought forward as the balance for that. So sorry, the balance brought down. Forward, brought down. Balance brought down. Yeah, balance brought down. So what is that give us for balance brought down? For the balance brought down, it's just some of. If you look at the table, let's look at the table. Match takings, match takings. Okay, we have to 20,000. Addition, we have all addition. Addition. What we have augmented amounts, augmented as 600. So now that we have that 2,600, so we can now go ahead and do it so add together. So we add it together. Here's the new balance. So now 600. This figure is what we're going to use to show information our statement of our income and expenditure. So let's go to the income and expenditure account, which we are working for. We're working for the year ended. So we are working for the year for the year ended. What the year ended? The year ended. That's 31st October. That's 13. So Now start taking it after that. Now let's start taking the order. The first one that we have there is so income comes first. Income comes first. After income, we have the expenditure. So we have the expenditure. So in the exam, you can just give a space for if you don't know the space to give after you have read through the question, don't panic. Just first of all, start use your pencil to identify the one that's income and expenditure. Just I the one that's income, put E the one that's expenditure. Then you can count and what and post. So you can just do your income for list your income first. After you have listed all your income, then you can now go ahead to your expenditure. So now let's go back to the question. So the question says that you should prepare that. So the first one that we have is rent and rate. Rent and rate is what is an expense. Rent and rate. Rent and rate. Well, what is the total figure for that? 2,500. That is, we have stadium what repairs. We have stadium repairs. We have stadium repairs. I mean, so what is the figure for that? We have to be 4,500. What again we have? We have match thinkings. Match thinking on income. So we come here and put what is given if we give figure given to us is 20,000. But remember, we have done an internal workings too. And what the internal workings too, we have figure it, and we are doing the was 22,000. So our taking 1,600, not 20,000 initially recorded. Nothing was so another state government, so that's an income onto us as well. So we have state government. Grant. What is the figure for that state government grant? We have to be 25,000. So what else do we have? We have the wages and salaries and expenses. We have the wages and salaries. And salaries was 15,000. No actual information on that. So another one we have is what payment bonus. So we have match bonus. Payment of match bonus. Okay. What is it got there? We got there is 5,000 is an expense. Okay. So what other things we have? We have another thing. We have transfer fee of player who left the club. That's transfer fee of what of players who left the club. So we have the transfer fees of players who left the club. What is the amount for that? The amount of transfer fees is transfer fees who left the club. So if they are going, the transfer fees is an income for them. Okay, it will be an income. Sorry, it will be an income. If you look at it, we have two types of transfer fees. We have transfer fees of player who left the club. So that one is an income. So we come here. Okay, let's put the income here. So we have transfer of player who left the that's 12,000. Then after that, what we have? We have the match expenses. So match expenses. So let's put the match expenses here. We have match expenses. I'm not deleting that. There's a reason. I just want to show you something. Match expenses. Match expenses is what is 3,500. After that, we have transfer fees on new player bought. So it means what when they are buying players, the amount that you incur. the transfer fees that you incur on buying new player is what is an expense. So transfer fees on new players box. Okay, and that will give us a total. That is what amount is that? 8,000. Okay, now that we have, there have to be 8,000. Another one that we have is what is fines after match expenses. Transfer fee, we have fines. What? Let's see. And now that figure given to us is what is 8,000 or 3,000. Now 3,000 is not what I'm going to use because we have done a workings earlier on, and we look at the workings here. These workings that we have here, fine and penalties, because they're still what they still have the case ongoing, but they have not concluded the case either when they are preparing their statement. So, but they need to make a provision for it. So the provision based on their experience of the legal advice, they make sure that they make provision of 2 million. So which means that what 3,000 plus 2 million, you have 2,000 give us 5,000. So here will be 5,000. After that, what else we have? We have cash and bank at the beginning. Cash and bank at the beginning of the period. It's not an expense. Cash and bank at the beginning of the period is what is an asset. So that figure will not be used. Another one that we have here is sales proceed of what? Of the memorable. So we have the sales proceed. So that's an income. Is a flow to the what to the club sales of memo. What is the figure there? The figure there is sales of men. Let me see. The figure there is 900. So we have that to be 900. So another one that we have is what? We have price money. Price money. So with the amount that we reward that we incur or win that also. So we have price money. So that's for us to have performed very well. We have prize money for winning. For winning FA Cup. All right, FA Cup. All right. So what is the amount given to us? 35. So after that, what else we have? We have motor running expenses. So we come down here. That's expenditure. So we have motor running expenses. And what is the amount for motor running expenses? The amount for motor running expenses is 500. So what else we have? We have donations received. That's an income. Donation received an income. So we have donation received. What is the amount for donation received that we have there? We have that to be 95. I believe as I'm doing it, you are following me. I believe so much. I believe that's so much. Okay, so we have that to be 95. And what else we have apart from 5 to be that to be 95? We have the what again do we have? So we have the admin expenses. We have the admin expenses. What is the amount for admin expenses? The amount for admin expenses is 2,000. So we have that to be 2,000. What else we have? We have printing. We have printing and printing and what? And stationaries. And that's what stationery is 400. So after with that, what else we have? We have communication. We have communication. Communication is what? Communication is 600. After that, what else we have? We have honorarium. That's the people coming to greet us and just appreciating them. IUMP or honorarium as 200. So look at our additional information. What have we not added now? What have we not treated in the additional information? We have insurance premium. Insurance premium have not been treated, so we have our insurance premium. You can, like I said, you can also start with additional information first. Then now you're done with the additional information. can move. So we have that. So what is it? What else do we have again? Mm, mm, okay, so let me cut this up. So we have premium to be 500. What else we have do we need? We have treated the fines. We have depreciation. Depreciation. How is the amount for depreciation given to us? 150. So we have to be that would be 150. So other match takings are also accounted for. So the next thing for us to now to add up. So let's add up. If we add up all this income together, that will give us a total sum of what? So press the calculator. Please always confirm if I'm wrong or correct. 2 right 600, 20,700 plus 25,000 plus 12,000. That give us 73,500 as an income. So we have 73,500. Now that we are done with that, the next thing for us is now to calculate our expenditure. So let's calculate, let's add up together. Let's add up together. Let's add up, let's see. So we have that to be 25 plus 45 plus 15,000 plus 5,000 plus 8,000 plus 35 plus 5,000 plus 500 plus 2,000 plus 400 plus 600 plus 200 plus 500 plus 150. That will give us a total sum of 14,000, 47,850, 47,850. So let's put here 47,000. So since our expenditure, we are losing it 47,850. So we are reducing it to 47,850. So we have it here. So if we let it together, that will give us either surplus or deficit. But since our income is more than that, so that will probably give us what we call the that will give us what we call the um surplus. That will give us surplus. That will give us surplus. So we call that surplus of income over expenditure. Now if we do that, so 73,500 minus 47,850. That will give us 40,000. Sorry, that's 43,000. So 3,500 minus 47,850. That's 25,650. That gives us 25,650. So that's our surplus for that. So that's the end of the question 2. The question 2 is not required. We are not required to prepare statement of financial position. What we are just required to prepare is the income and expenditure account. Is the income and expenditure account. So basically, that's the what's talking about for. That's what the topic is just talking about. It's talking about trying as much as possible to prepare accounts for a non-profit making organization. So it will enable us and assist us to prepare the appropriate accounts so that it will be different from the profit making organization. So I now want to ask if you have any question on this. If you have any question on this topic, the ones we have done so far, right from the income, right from the receipt and payments, down to the income and expenditure account, down to the subscriptions, down to the way we treat any question. Please, if you have any question, let me know. Okay, yes, okay, okay. Second, yeah, you can go ahead and ask your question, please. Second, okay. Mr. Kenny, can you hear me? Can I use the chat button to ask a question?
Hello,
Okay, yeah, I can hear you.
can I go ahead?
Yeah, you can go ahead, sir.
Okay, I just want for this particular topic.
I can hear you clearly, sir. You are breaking.
Hello, I say for this
Yeah.
topic you didn't use T format. Is it
For
that
which one, sir?
for this particular one, the one
Okay.
the account for non-for-profit making we just treated.
Okay.
Doesn't mean if you use T account it will be penalized, or we can just use the other.
Okay. If we use
T format rather.
If you use T format, you won't be penalized. It's what works for you. But if you look at the question 2, they actually require that we use vertical format. And the reason why I'm
Yes.
using vertical format here is we have been using T format. But I just want us also to see how vertical format works. So that if you will now look at, okay, which one works for you, the one that works for you, fine, then you go ahead with it. You won't be penalized if you use your T format.
Okay. My second question is for additional information. You know, was it the last topic you said? I mean, the last lesson, rather, last class, you said we can either use T format or we just do our calculations straight away like that and all that. But I see that the T format is
Yes,
kind of
you just do
the T format is kind of detailed and all that. But my question is
yes.
the other way and the other topic. Do we have anything to lose?
No. You don't have anything. No, you don't have anything to lose. It's your workings. They will give you a mark for workings, either T format or the other, or this the way I show this one. They won't nobody will penalize you for that, sir.
I think that's basically what I want to know. Maybe in the course of going through the questions, if I see any query, then I will call your attention to that.
Okay, that would be lovely. That would be lovely. That would be lovely. Okay. Thank you, sir. Okay, so because our time are fast spent, I will not be able to start a new topic now. So we'll just call it a night, and we shall continue from there in our next class. We have few topics left, few topics to actually deal with, and like I said, I'm also looking for a day that we're going to address some topics. We are going to look at the objectives. So we have been talking about all this now. We're going to look at objectives, pick like two or three past questions and able to solve it together, then you see how you can easily solve things on time and you move on. So, in absence of any further questions and information, I would love to call it a day and we shall meet in the next class. Thank you for joining me. My host.
Yeah, thank you, sir.
Yes, sir.
How was the class today?
We bless God, though.
Yeah, okay. Thank
Okay,
you.
sir. Thank you very much, sir. I appreciate it.
Yeah.
Yeah, sir.
All right.